Hi, and welcome back to another Money Not Math episode. I appreciate you taking the time to watch or listen to this episode and hope it brings value to you on your retirement planning journey. If it does, please help me provide more value to more people by sharing this episode with a friend and leaving a comment or review. I love to help people have more confidence in their financial future. My mission is to provide the highest quality advice and service to clients possible. Therefore, I limit myself to 100 active clients or less at all times. Please reach out with retirement planning questions or requests for future Money Not Math topics at drew@fivestonefinancial.com. Remember, this content is not legal, tax, or investment advice. You should always consult a qualified professional regarding your personal situation. Thank you, and with that, let's jump into today's episode. What is a backdoor Roth IRA, and how should I set it up? When should you avoid this strategy? What makes a backdoor Roth IRA different? Do you pay taxes on backdoor Roth IRAs? Are backdoor Roth IRAs worth it? How much can I contribute? What are alternatives to backdoor Roth IRAs? So in today's article, we are referencing an article by Vanguard.com, and my dog is very curious about Roth IRAs today, so he's nudging me. And it's titled Backdoor Roth IRA, What is it and How to Set It Up? Like I said, it's on Vanguard.com. And it starts out by saying backdoor Roth IRA is simply a term to describe a strategy used by high-income earners who cannot contribute to a Roth IRA because their income is above certain limits. Rather than contribute directly to a Roth, you can contribute to a traditional IRA and then convert to a Roth. Hence, backdoor Roth IRA. A Roth IRA is a popular retirement savings account to which you contribute after-tax dollars, and if you meet certain requirements, you can withdraw both the invested money and earnings accrued on the money tax-free in the future. You might be a good candidate if you think you'll be in a higher tax bracket when you retire. The benefit of a Roth IRA is that it offers tax-free growth. You also might be a good candidate if you just don't want the uncertainty of unknown future tax rates. So backdoor Roth IRA income limits. If your modified adjusted gross income is above certain income limits, then the amount you can contribute to a Roth IRA is phased out. The phase out occurs between $138,000 and $153,000 for single people or single filers, and $218,000 through $228,000 for joint filers in 2023. The backdoor method allows those with higher incomes who cannot contribute in the typical manner to still take advantage of a Roth IRA, or in other words, take advantage of after-tax money that's growing tax-free. So, how to set up a backdoor Roth IRA? There are two ways to set up a backdoor Roth IRA. First, you can contribute money to an IRA and then roll over the money to a Roth IRA. For this strategy to work, you should contribute to a traditional IRA with no balance. If there is a balance in the IRA, things get kind of confusing. There could be a taxable event when you convert. Once you contribute to the account and wait for any required holding period, you'll then convert the account to a Roth IRA. Any money earned due to market performance before the conversion takes place is subject to taxes. The contribution is considered non-deductible once you fill out the IRS Form 8606 and complete your tax return. Note that there's no tax benefit for the year you establish a backdoor Roth IRA. Also note, like I kind of mentioned there, is it can get confusing if you have other rollover IRAs or taxable or tax-deferred IRAs. When you're doing this strategy. So make sure you know what else is going on. You don't just look at a backdoor Roth IRA in a vacuum. Also, as noted here, it can be confusing or it can create issues or taxes if you have growth within your portfolio. So sometimes it makes sense, the money you put in your IRA to later roll, just leave it in cash so you don't have to worry about it. But things to be considered, right? Make sure you talk to someone you trust. The second way you can utilize a backdoor Roth IRA is if your 401k plan allows it. You may be able to do a mega backdoor Roth conversion. Some 401k plans permit automatic Roth conversions, which means you can make after-tax contributions and have them automatically convert to Roth within their accounts. Check with your plan to see if this option is available to you. This can be there's also in-service Roth conversions that isn't highlighted in this article, but maybe they're kind of just lumping into one of those two options. So we've done it with some clients where they'll actually be currently working at their company and they can do a in-service Roth conversion or within their 401k. So point being, there are options out there, but there are different variables that affect your options. So make sure you're aware of everything going on within your financial picture, the laws, and I would advise talking to an advisor to determine your best options. So, when should you not consider this strategy? A backdoor Roth IRA does not make sense for everyone. If you are able to make a Roth IRA contribution the standard way, then you don't need to use the backdoor method. If you have a balance in a rollover IRA and plan to contribute to that account, you may not want to make a backdoor Roth conversion because of the pro rata rule. This rule requires all IRA distributions to be taken proportionally from your pre tax and after tax contribution sources. So, what they're saying there is this rule requires all IRA distributions to be taken proportionally from your traditional and Roth IRA accounts, your qualified, your pre tax or tax deferred, and your after tax accounts. This could limit the tax benefits you'd receive from a Roth conversion. For example, if you have a total of $1 million in IRA assets, tax deferred, and $100,000 or 10% is after tax money, then 10% of any withdrawal must be taken from after tax money. For a $10,000 withdrawal, $1,000 would have to be after tax money. So as you can see, the more accounts you have and the more way you have money positioned from a tax standpoint, the less potential benefits there might be to doing a Roth conversion, or just the more complexities to be aware of. It's important to keep in mind when you plan to use the money. If you're looking to withdraw the money within 5 years, you may not receive all the Roth tax benefits. Also, when creating a backdoor Roth IRA, you'll have to work with an accountant to file tax forms to ensure you complete it accurately. So, what makes a backdoor Roth IRA different? The difference is the way you make your contribution. High income earners use the backdoor technique to establish a Roth IRA since they're unable to contribute in the standard way because of the Roth IRA income limits. Do you pay taxes on backdoor Roth IRAs? If you contribute money to an investment that accrues earnings before you complete the conversion, then you'll have to pay taxes on those earnings. Once the money is in a Roth IRA, your withdrawals will be tax free if you meet certain requirements. If you're subject to the pro rata rule, your IRA distributions must be taken proportionally from your pre tax and after tax contribution sources. Plus, you still have to follow the laws that Congress has set upon you when it comes to how Roth and IRAs work. Are backdoor Roth IRAs worth it? You should consult with an advisor or tax professional, or both, to discuss your personal situation. I say both because oftentimes we both might have good advice that doesn't actually agree. Okay, so there can be more than one right way to do something depending on what your goals are and your main goals are. It's best to sit down with an advisor who can help you determine if a backdoor Roth IRA would be beneficial to your situation. And just to kind of add a snippet to that, I'm not saying CPAs are right and I'm wrong, or I'm right and CPAs are wrong. What I'm simply saying is their job, oftentimes, to put it simply, is to save you money in taxes this year. My job is to look at the big picture of retirement and how to make your money work as efficiently as possible for you. So this year and the big picture of retirement doesn't always mesh, but oftentimes we are trying to help. So it's not like either of us is wrong. We're just maybe looking at it in a different way. So how much can I contribute? You can contribute up to $6,500 to a Roth IRA in 2023. Or if you're over 50 years old, you can contribute an additional $1,000, so $7,500 total, if your income is below the phase out amounts highlighted earlier. What are alternatives to backdoor Roth IRAs? If your income is above the phase out amount and you do not want to complete a backdoor Roth conversion, then your alternative is to invest in taxable accounts like a non-qualified investment account, or other alternatives like whole life cash value insurance, start a business, invest in a business. There are alternatives, but the most common alternative is definitely a non-qualified or a non-retirement brokerage account. They won't offer the same tax benefits, but will give you an opportunity to diversify your investments. And this is also a really important point. Oftentimes, I think people get so enamored with the idea of retirement account, the name retirement account, that they think it's the only and best option. Whether it's a traditional IRA, traditional 401k, Roth IRA, or Roth 401k, we're just almost trained or taught to believe those are the only and best options. However, because of how capital gains taxes work within a non-qualified or non-retirement brokerage account, sometimes a non-qualified account is actually more tax advantageous than a qualified account like an IRA. So don't always just write off taxable accounts as really, really bad things. Every single thing has a pro and a con, or it's the best for certain situations, but it's not the best for all situations. All right, so hopefully this conversation is helpful for you. Please reach out with any questions or future Money Not Math conversation requests. I appreciate your time. Hope you have a great day. Thanks. Bye.